look out my window.
Hello traders, Gary Wagner with WFGForex.com, your daily market update for Forex Gold. It is Friday, July the 2nd. This is the daily report, our weekend review. After witnessing the largest single-day drop since February, we do have Forex Gold off of those lows, currently trading around 12.12, 12.11. Everything is winding down as Forex closes for a long 4-day weekend here in the mainland. And on today's report, we're going to cover not only the activity that we saw during the week, but we will be updating our Elliott Wave and look for projections as to where I think we're going to see this market go over the next month or so. We will go back to our daily and take a look actually at our weekly also chart of Forex Gold. But as you can see, I've got a 30-minute candlestick chart here up on the screen. I wanted to show you just how quickly that market came down. When the market began to come down, and it was trading at around 1242, it was trading very, very stably. Once the market came down in increments of about $1 to $2, you can see these moves simply pushing the market down, actually trading well below 1200, forming a base, and then trading higher to around 1212, coming down back, testing and forming yet this secondary base. And I will show you why I think that 1202 is such a critical number in terms of Fibonacci as we look at our dailies. Once it formed that base, it did tend to track and trade higher. Of course, traders, this, as far as I'm concerned, is the big picture. As you can see, I am starting with our first historical top we had last year at 1221. Our Elliott Wave count, of course, will always have our fifth wave at the absolute top of the market, and with absolute certainty we can say that that in fact was that. So therefore, correctly, we have our first set of corrective waves within our corrective phase. Elliott Wave works at a total cycle of 8, waves 1 through 5, and then corrective phase A, B, and C. Of course, once we go out of the corrective phase, and that happened here in February, we get our bottom and then we go into our impulse, which is going to be, as I said, our 5 waves. Waves 1, 3, and 5 will be our impulse waves up, and then waves 2 and 4, these right here are going to be our corrective waves within the impulse phase. So that what we saw on the activity over the last few days and absolutely confirmed yesterday was the beginning of our corrective phase, which is where we're at now, because I've now labeled this A. Now, what are we looking for when we actually see that market move there? And for that, we're going to need to use some Fibonacci, as well as Elliott Wave and candlestick projections, using all three together to formulate what we're looking for in terms of a forecast. So what I've done here is I've put up a basic Fibonacci sequence. I am looking at retracement levels from simply this low here, this is wave 5, the bottom, to the top of wave 5 here at 1265. And when I do that, we get our 23, 38, 50, 61, and 78% retracement levels off of this one wave here. Again, this is wave 5. So what we saw is that when this correction really sold off the other day, it did start at a 23% level, but it did really, like a hot knife through butter, go through 38 and 50%, and then actually began to trade below the 61% level. I think that it went as low as 96, 1196, 1197, but it absolutely looked like it formed a base. Now, if you noticed at the beginning of this program, we talked about the fact of why I thought that 1203 was so important after it came down and then formed that base. The reason is because it does match up with this Fibonacci sequence number at 1203. The other thing is that we're seeing what's called an incomplete piercing line, in which when it opens at the closes, you're always going to get trades higher. On a complete piercing line, it would breach the midpoint or close higher. However, this on neck pattern, if we in fact get confirmation on the next trading session, a candle would look something like this. So that if on the following cycle we get another red candle that at that point goes in and breaches that midpoint, of course, and trades higher, that would be confirming this 2-day pattern. So that if we got the fact that we have our A wave matching with our Fibonacci sequence in terms of our retracement at 61.8 and then a candlestick pattern, we get all three together, that will give me an indication and confirmation that that A wave is over. Now, if we are truly in a corrective phase though, what will happen is this next wave, which will be our B wave, will have a lower high, of course, than this fifth wave. So that in terms of a target area, where do I think that this impulse wave B within our corrective cycle would go? If it follows Fibonacci sequence, it's either going to go as high as, say, 1226, or it would go to, let's say, 1241 before it goes into the final C corrective wave, which would probably take us back down to, my target would be around 1186. So that I think that if in fact this follows our Fibonacci sequence and our Elliott wave count, what I would be looking for is, if this is the bottom, in other words, we get confirmation on our next trading sessions and it doesn't move to the next retracement level, meaning 76% here, I would look for a move either to 1226 or 1241 until we saw some sort of indication that that market was going to retrace again. At that point, I would look for our final corrective wave. In a true corrective phase, of course, you're going to have a lower high when you compare these waves and also a lower low. So for this C wave to actually follow Elliott wave, it will take out that 1203 and form a base probably, as I said, around 1186. At that point, I would look for the market to continue its upward trend and move back into its impulse phase, and we would go back through our cycling waves 1 through 5. So that, in essence, is what I'm looking at in terms of where I think the market could go over the next month to 2 months. Our corrective phase is typically a much shorter phase than the impulse phase. And if we are truly in a bullish market, as I believe we are, we will need to sustain this corrective phase, as well as this A and B, these two corrective waves. Now, what are my recommendations? We have opportunities not only to sell this final C wave and buy this impulse wave 1, but depending on how much longer we think we have in terms of length and how it reacts in this one area right in here, we might have one short buy signal that we can issue right in here. So I think that the correction that we saw in this market was needed. It was essential. A market is not going to go straight up or down. If in fact it continues to track and follow our Elliott wave sequence, as it's done so eloquently throughout the last trading year, then I think we've got some clear-cut forecasts and some clear-cut strategies to guide us over the next 2 or 3 months, meaning the summer session here. This has been Gary Wagner with WFGForex.com, your daily market update for Forex Gold. This has been the weekend review on July 2nd. And traders, I'm wishing you, as always, good trading. Bye-bye.